Hi everyone, good evening. So in our last video, we were discussing that how many methods are there to analyze the financial statement. If you are a financial guys or if you are a non-financial guys and you want to analyze the financial statement, then there are specific tools or method provided over there. And all these method we have discussed in our last video. So there was basically five method you can say, or you can say five tool was there. Okay, and from using these tool we can analyze the financial statement. Let me revise again these five method or tool. So one, the method was comparatively analysis of financial statement. Second was common size statement analysis. Third was by trend analysis we can analyze the financial statement. Fourth was ratio analysis and cash flow analysis. So these were the tool basically, and by using them we can analyze the financial statement as per our requirement. Our requirement can be very depend upon your individual requirement. If I am the individual investor, then my requirement will be definitely different. If I am a corporate worker who analyze to get more clarity from corporate perspective, then definitely I will keep different things in my mind. So these five tools were provided. Okay, and we have already discussed these tools in our earlier videos. Now in today's video we are going to discuss limitation of the financial statement. What is the limitation of financial statement? Okay, so when you are analyzing the financial statement, to some extent analysis will give you some kind of the information, some kind of the input to take further decisions. But definitely there is no sure rule that okay, if you do analysis then things will get be correct. But some of the info limitations is there to analyze the financial statement. I'll give you brief about that, what kind of the limitation is there. Number one thing is that financial analysis only consider price level changes. This analysis does not consider price level changes when you are doing the analysis part. So what you are going to do, you just analyze different years financial figure, different years financial data. Okay, financial data you read out and analyze, but during that year you do not consider any kind of the price level changes. Whatever price level changes happen in sales, in COGS or any other factor that was happened, so you do not consider, you just keep simply what was the figure mentioned in the financial statement. So number one thing is that you do not consider these things. Second is financial analyst may be misleading without the knowledge of changes in accounting procedures. So as all of you knows that every entity has their own accounting policies, accounting principles, and based on these accounting policy and principle they prepare the financial statement. Okay, so it is very important that we have to keep in our mind that what kind of the accounting policy company is following. And when we are analyzing the financial, we should keep in our mind that accounting, what is the accounting policy of the companies regarding in this. For example, I'll give you one simple example, that okay, when you are saying that depreciations amount is for a particular year increasing, okay, depreciation is increasing. So here you just simply, when you are doing the analysis part, what you will do, you just simply saying that okay, comparative to the last year depreciations has increased or decreased, because you are just comparing the figure. Okay, if suppose last year it was 100 and now it is 120, you are just comparing that okay, it is increasing, it means some addition might be happened in the depreciations. But you are not following here that if company had changed their accounting policy to calculate the depreciation, there are different method to calculate depreciations. If company has changed, depreciation calculation method from the SLM to WDV to, different methods, then this price level can be changed. But here at the time of analysis, you do not consider these things. So this is again a big limitations are there. Number third, if we want to discuss, then our analysis is just, you can say it is a simply a analysis of a company's report. Other factor we do not considered. Okay, it means in analysis part we consider only monetary item alone at the time of analysis. We do not consider other non-monetary aspect here, because what type of the decision was there, what type of the, conditions or situations of, during that particular year was there. For example, in 2020 COVID happened, and if you do your analysis, then what you will see that, okay, in the 2019 company made 100 million revenue, but in the year 2020 the revenue was only 40 million. So you cannot take a decision based on the financial data. You have to consider other factor also, because other factor is that major diseases medical emergency happened during the year in the 2020, and that is why people, complete city, complete country, got blocked for few months or few weeks. Then that is why this, decreases, sudden decreases happen in the sales. So same thing at the time of analysis of financial statement you do not consider, and that is why this is again one of the limitations of the financial statement. So like that, different kind of the, non-monetary aspect, non-monetary things that are there, accounting policy, accounting estimate, these are the technical aspect, window dressing, you can say, price level changes, you can say, these are the some of the things that, an individual or an investor do not consider while they are analyzing the financial statement, because we analyze only financial data, rest all the other things we do not consider. So you can say that except financial data, all other are the limitation of the analysis. But anyways, analysis of financial statement will give us some kind of the informations, but we cannot say that 100% will be the correct one. All right, so this is how we have completed our limitation of the financial statement. Hope you like the video. Thank you very much.